Welcome to the Early Stage Investor, where life-changing returns are the only priority. Make sure to visit silverchartistnation.com for a free weekly chart pack covering early stage assets ready to lift off. Now, here's your host.
I want to welcome Brandon Macdonald. He is CEO of Fireweed Zinc, which is a base metal company focusing on zinc, lead, and silver. Brandon, welcome to the Early Stage Investor.
Yeah, thanks for having me, Elliot.
So I just want to start off. So given your extensive experience in the space, I want to ask you what makes you bullish on the base metal business right now?
I guess there's a lot of things. First, there's a broad expected sector rotation, right? So we've seen the main markets, not just the US, but everywhere on an unprecedented bull run for a long time. Ratios, quite honestly, at alarming levels. And whether that's going to, do for a soft landing or a hard landing or a correction, historically, what has happened when, like after the .com crash and these sort of things, you get a sector rotation into hard assets. So this is precious metals, base metals, oil and gas, not just other commodities and other hard assets, right? So the expectation is that happens sometime soon, if it hasn't already started to happen. Certainly the mining space has been rejuvenated, I would say, in the last year, despite the impact of COVID. Then we have very situational stuff unrelated to that sector rotation, which is the impact of COVID for some base metals in the medium to long term is actually very positive. Zinc being a major benefactor of what should be very substantial investment in infrastructure. So, the governments have sort of played their monetary policy hand. But now it's a question of fiscal stimulus and how are they going to put money to work other than just liquidity? One of the few places you can spend $1 trillion, if you want to spend $1 trillion, is infrastructure. So infrastructure means steel. Steel means galvanization. Galvanization means zinc, but this also means copper, nickel, etc. And I think for a lot of the base metals, less zinc, but definitely nickel and copper, and tin being leaders in this, the electrification trend is going to be massive. As we shift from oil and gas to electric powered vehicles, there's going to be a big demand for copper, nickel, etc. So there's kind of like a confluence of impacts here. And then the last impact that, happens, and this is in any really cyclical sector, is that during a slow period, and it's been fundamentally slow in mining since early 2012, you get underinvestment in exploration and development. And the lead time from discovering a new, deposit that could be a mine to actually mining it is optimistically 10 years at the best case scenario, probably 15 plus realistically. So you constantly as an industry have to be planting seeds for the next decade's harvest. So when you have an 8 to 9 year bear market in metals, there's no planting of seeds. So the investment in discovery of new deposits and development of existing deposits is just not there. And that's something that you don't feel at first because the lead time on these things is so long. And you can you can do brownfields of expansions of existing mines to a degree, even for a while. And eventually there's no mines you can expand, and existing mines are coming offline as they deplete their reserves. And there's nothing left to replace them. There's just none of these new projects ready. So this is classic, cyclical markets, an underinvestment, then a increase in demand, and prices go nuts because you just can't bring on supply to meet the new demand quick enough. And then you get overinvestment, too many projects, prices collapse, et cetera, right? So this is the fundamentals of the cyclical nature. But what we're seeing this time is not just a unusually long bear market leading up to this. You've seen just that even on a dollar adjusted basis, exploration dollars are accomplishing less than what they used to. So it used to be, I don't have any hard numbers here, but if you spent X million, you might expect to find a certain amount of metal, and that's been getting harder and harder. And this is in large part because the mines that could be easily found have probably been found. There's not a lot of places left on the earth where people haven't flown over or looked or prospected or something like that, right? So gone are the days where you can be the first person on a mountaintop, find an outcrop that shows, a lot of zinc sulfides or something like that, and say, hey, we should drill here, so that's gone. So now we're exploring undercover, so it's a lot more difficult and costly process. And then even then, the high grade sort of projects are disappearing or at least less common. So the head grade, which is the grade that they're mining at any given moment in a mine, is decreasing globally. So the average grade of a zinc mine 30 years ago is probably twice what the average grade of a zinc mine is now. So this obviously causes cost pressures because just the unit costs per ton of metal you're getting are just higher. So what it's all setting up for, this infrastructure investment, this sector rotation, this underinvestment in exploration and development, et cetera, this is a perfect storm for base metals. And it's going to be hard to predict exactly when it launches. It certainly looks like we're on the launch pad now. But when this goes, it's going to rocket.
Yeah, no, you explained that very well. You covered a lot of different reasons and tailwinds why base metals should do well. Not even to mention the debasement of currencies and how anything priced in those currencies will rise, specifically potentially the US dollar, given how indebted we are. And just one thing I want to dig in on is the fact that, you are an expert in the field and you're saying that the known deposits, the known resources are drying up almost, it would seem. So it's going to cost more and more money to get at them. Is there new technology, though, that you could see on the horizon that could be a catalyst just for finding a lot more of these resources fast that would potentially lower the cost?
No, I mean, look, it's always new technologies, and I would say that something that's emerging might possibly be machine learning and slash AI. Interpreting these massive data sets that individual people just have a hard time wrapping their heads around its totality. So looking for that signal and what is quite a bit of noise and where maybe people just can't see it, right? But you do have a big problem that as you're looking under deeper and deeper cover, the noise gets stronger and stronger and stronger, right? Like, so it gets very hard to find the signal. At some point, you're having to do very expensive drill holes, etc., just to get your first data points, based on kind of a theory and a tectonic model of the area, that we see this type of deposit in this area along this trend. We expect there to be more here, but it's all buried under cover. So, someone has to take the first step to be brave and go down and start taking the first data, right?
Right, exactly. So there's nothing that you can see really that'll just quickly in the next 5 years just revolutionize the space and just make lower costs big time.
No, there's incremental advancements in interpretation of geophysics and geochemistry and like I said, machine learning, but there's no silver bullet for this problem. It's just getting a lot harder. And people who are exploring in this era, there's a certain cynicisms about the legends of old, because the people who found the Bingham Canyons and what have you of the world, it was really not rocket science or even rock science. It was just walking up and it was plain as day there was something there, right? So we're having to, you know, do a lot more, put a lot more rigor into what we're doing to find these things.
So, given this confluence of positive events in the base metals space and the prices of these commodities, what do you think is the best way that investors can take advantage of this price movement?
I look, there's a lot of, different ways. I mean, I guess it depends how sophisticated the investor is and how much time they want to put into this. I mean, if you have a broad portfolio and you're thinking, look, I want to go overweight, metals and mining, the safest place is usually with the producers, right?
Yep.
They're cash flowing. You can do a little bit of research or read some reports on which ones are the best in class and which typically are going to give you good returns for less risk. You can take the approach of looking for the marginal producers, where you've got the most torque to the change in metal prices, but of course that also gives you the most risk. What I tend to focus on is pre-production assets, but this is also the space that is most esoteric and most dangerous. And it's dangerous not just because it's hard to you have to have a lot of specific knowledge to really make sense of what these companies are talking about. But there's also, quite honestly, a lot of charlatans in the space as well, right? Because they understand that it takes specific knowledge to recognize or see through their BS, right?
Yep.
So they're happy to spout it. I think that, and even within that space, are you targeting development plays that are in the final stages before they get to become a mine? Are you looking at exploration plays, which is really you still leverage to the commodity, but really then you're fundamentally get the most leverage to the abilities of the team there, right?
Yep.
Or is it some sort of hybrid? And like it really comes down to how much research you want to do. What we did was we bought an asset that was a little bit unloved that gave us some immediate leverage and viability, and then built a company around that with some additional exploration, right? So there's a lot of ways to crack that nut. But I think that people who are believers that this rotation is going to happen and there's going to be some real tailwinds for the metals space should figure it out one way or another, even if it's just a simple ETF or something.
Yep, makes total sense. And we're always on the lookout for good assets that have potential to rise and are kind of early stage. And that drew my attention to Fireweed Zinc, low market cap miner up in the Yukon. So now that we have you, can you tell us a little bit about the company and why, what the growth outlook is and what are some potential catalysts for it?
Yeah, and I think before I talk too much about Fireweed, I'm going to give a recent example. The zinc space was a bit of a microcosm of the current metal space. Starting about 3 years ago, there was two major mines that shut down in 2015-16, and it sent the metal prices, crazy. They went from about 80 cents or 70, 80 cents to about $1.60 per pound was the peak in 2018. So what happened also during that time is there was what was a little company called Arizona Mining with a share price of about 20 cents that had a project, Taylor Hermosa, in Arizona. And over 2 and a bit years, through a combination of exploration, rising metal prices, investor eyeballs and interest, they went from 20 cents to 6.50. Where they got bought for just over 2 billion Canadian by South 32, a major mining company. So that's the model, right, that we all try to aspire to. This idea that you can be a 20-cent company and in 2 years you can be a $6 company.
Yep.
And so, Fireweed, what we did was, the core of our project was 2 deposits that we bought out of a mid-tier mining company called Hudbay, that they hadn't looked at in a while. We knew it was of no interest to them. It was in Yukon, where they hadn't ever had a mine. They have been sitting on them for a long time. Like, they originally discovered one of these two deposits in the 50s, had not done any work for decades. So, we bought that and then assembled the land package around it, did some exploration, and proved a bit more up. And, that's critical, is saying, like, what's there, and how do we expand what's there, how do we make it more attractive. As I say, it's there's no 5-star assets for sale. There's no assets that are 5 out of 5 stars that you can just go and buy, unless you got billions of dollars. All right.
Right.
So for those of us who do not have billions of dollars to bring to bear, you're fundamentally looking for an asset that you hope is that you think is 3-star, but it's priced like a 2 or 1 star, and that you think has a chance of becoming 4-star. Right. So that's really the game, and that's what we did. And what's been interesting about our project, Macmillan Pass Project, is we've had such success expanding the zones of known mineralization there. We bought a 2-star asset, and we think it may be a 5-star. Right. So still early days, but the recent results we've been putting out suggest a true district scale system and a staggering metal endowment. And when you have this sort of metal endowment that is just extremely rare for a junior to be holding a project this big, then you hopefully duplicate like what happened with Arizona mining. And that's our hope, and our game plan is to size it up, de-risk it, seek partnerships and investment, and then likely sell it. And there's all sorts of potential landmines along the way, but that's what having a good team and a good management team helps you avoid and manage.
So what have you found that makes you optimistic about the current project up in the Yukon that you're working on?
So, the project we initially bought was 50 square kilometers with 2 deposits on it. Together, these 2 deposits were pretty big. I think they would amount to about the 35th largest zinc lead project in the world. I think 12 billion of contained metal, US dollars worth of contained metal, something like that. We expanded the project bit by bit to what it is now, 940 square kilometers. And just simply having a large project doesn't mean you've added any more metal, but we've demonstrated at least 2 more known zones of mineralization, one of which may be the most impressive zone yet. And we see signs of at least 6 to 7 more potential deposits. And it's very common in this industry to talk about a district scale land package. That doesn't mean you own a true metals district, right? So, but we think, we have 4 known deposits established here. We have hints of a lot more. We have a pretty good thesis on how these things are formed and how you would go exploring for them that we've been putting to use, and that has been successful. So to us, this is pretty clear that we're onto something special here. And to be able to have locked down the entire trend is very meaningful. And then this is what gets, the attention of the major mining companies. Because, when they come in, a big mining company, whether it's a Teck, a Rio Tinto, BHP, Anglo American, or whatever, one of the big Chinese groups, something like that, they're not particularly interested in a mine with a 9-year mine life, particularly if it's in a jurisdiction that they're not familiar with, right? Because they're going to have to come in, they're going to spend probably 9 years engineering and permitting it, build it, and they're going to be out in 9 years, right? So this is a whole lot of effort building, capacity in a jurisdiction only to be, out as quickly as you were in. So this very long mine life assets are critical to majors. It needs to be a production profile that moves the needle. And then it needs to be a long enough mine life that once invested in it, it pays dividends for a long time. And what we're seeing in our project that, it's going to be a healthy, probably 20-year mine life out of the gate. But if this district, bears fruit, you could be here for a whole other generation. And that, is really enticing to these big mining companies.
Yeah. Okay. So, and that's kind of what you're seeing in the drill results, right? To kind of
Yeah.
prove that. Okay. So why was the asset unloved? If you're seeing all this great stuff now, I mean, how could you have picked it up cheap?
Yeah, look, so when there were two deposits that were owned by different people, and Hudbay bought the second one in 2006, even though they hadn't done any work there since 91. And they thought maybe they would do something. They did a tiny bit of work in 2011 and then gave up. The market collapsed in 2012 again, right? So these assets are remote, and they probably thought, look, this is going to be an uphill slog, and Hudbay specifically was trying to transition into being a copper miner from a zinc miner. So it's a jurisdiction that they're not familiar with, that and a metal that they're trying to shift away from. So that was an opportunity for us to chat with them about it. And when we did a site visit with them to go take a look at it, there was nobody left within Hudbay who had been to the project. So for them, it was truly an orphan within the company. And within these big companies, if there's no internal champion for a project, the value might as well be zero. Because you think about the present value of future cash flows. Well, what's the present value if you're not doing anything with it, and you haven't done anything with it in 20 years, and I'm probably not going to do anything with it in the next 20 years? What's the real value of that asset to you?
Yep.
It's zero. So we came in with an offer that gave them a bit of cash up front and gave them part of our company, and it was a chance for them to monetize what was something that really had no value. So it's worked out for us, and I think it's important to remember that they only owned that initial 50 square kilometers. It was wheeling and dealing on our part that put together the remaining 900, including deals with Newmont and Teck, a couple other majors, right? So we've done something that nobody else in this area has managed to do, which is assemble what we think is like the true sort of district profile. So that's would Teck and Hudbay have done that deal with each other? Maybe not, right? But it took us to kind of come in and say to both of them, like, look, you're not doing anything here. Like, let us take it on and let us find some value here for you. And this is not uncommon, right? That if you can go in and make the case that we think this asset could be worth something, we want to devote it, and we're going to use other people's money to de-risk it and explore it. A lot of majors will take that transaction.
Yeah, and I can see how you kind of had a competitive advantage in the way all things kind of fell together for you to accumulate this.
Yeah.
Okay, so then what is the plan to get the metal out of the ground?
Well, that's the $1 billion question. But for us, we put out a preliminary economic assessment in 2018, and that was just on the two initial deposits we bought off Hudbay. With what we've discovered since, particularly with the new zone we've found in the west, or kind of that might be the biggest zone yet, that old mine plan from the preliminary economic assessment is kind of going to get thrown out. So we're going to have to redo it. I mean, this is a bit of a Hollywood problem, so to speak, because we're going to have to redo the mine plan because it's likely going to be a lot bigger and better. But this is the task before us, is probably spend the next 2-3 years defining what's there and defining a mine plan before kicking off permitting activities. And this is, it's mining to a lot of people. It seems absurd, if you're coming from being a tech investor who's used to, people bootstrapping their companies out of a, garage. Whereas mining, this project will probably have $200 million spent on it before you even make the decision to build the mine. And you'll probably need to spend another 300, 400, 500 plus million to build the mine. So, you're going to be the better part of $1 billion into it before you get a single cent of revenue. Right. So this is the mining industry. Right? So it's a lot of people would consider it absurd, but when you do it right, when you find that thing and when you find that special project and you establish it as special and de-risk it, the prize is big.
Yeah, absolutely. And you're proving kind of how rich the land is. So one of the big majors or someone with all that funding, if they can do an ROI analysis on it, would probably see that it'll pay off in the long run. And is that kind of what you're seeing this project as being, a positive ROI development?
Oh yeah, absolutely. I mean, I think, if there wasn't a sense that there was a real positive return on investment, um, you'd stay away from it, right?
Yeah.
The nice thing is that it seems to be getting better and better. So often with these projects, most of the surprises tend to be like, oh, okay, that was a bit of a surprise. And then, well, how do we manage this crisis, right? Whereas with this one, the surprises all seem to be positive. So knock on wood, fingers crossed, that trend continues. And like I said, you end up with something truly special. And this industry is such an interesting one for investors because you can invest in these nano cap companies that can go from single digit penny share prices to dollars. They can also go from single digit pennies to zero, right? This is the risk. But it's enticing for outsized returns. I certainly do very well in my portfolio, but then again, I also have a wealth of industry experience that lets me avoid the most problematic companies.
Right. And especially right now, everyone's valuing these assets in today's prices. But if the bullish base metal theory that you talked about earlier comes to fruition and zinc prices go up, silver goes up, then the positive ROI gets a lot better, right?
Yeah, and you got to remember that if you're working in corporate development for a major mining company, you don't ever have you're never tasked with buying a new zinc mine when zinc prices are low, right? Like, because your revenue is low, your share price is low, your fund and your the hedge funds that own you are telling you to like tighten your belt, spend less, et cetera, et cetera, et cetera. So all the M&A in this space is done at the most buoyant parts of the market. So, what we're trading at now, if you believe a company like Fireweed can be one of the M&A targets during this cycle, then it's meaningless to price it based on the current metal prices or the current share price, because it ultimately transacts in a totally different paradigm, right? And, the hope is that if you time it just right, you can absolutely maximize your outcome. And you look at, like the example I used, Arizona mining, literally days, maybe even less than a week after South 32 announced they were buying them, Trump started the trade war with China, and it started a rapid decline in the price of zinc. Like they timed that transaction right at the top of the market, like right at the top.
Yeah.
And that's a victory for the owners and shareholders of Arizona mining, and perhaps South 32 feels a bit sheepish, but who saw that coming, right? So that's the critical thing is when you have to look at the best in class. I think I try to stay at the best in class assets. I don't look for the garbage assets that are marginal, that have the most torque to the metals price, because those aren't the ones that get built this cycle or taken out this cycle. They might be the ones that get built the whole next cycle, right?
Right.
Because you have to be non-marginal for a full cycle to get permitted and built. And so those marginal ones, it looks enticing because it's like, oh, their cost of production is like 95% the current metal price. So much torque if the metal price doubles. It's like, yeah, but maybe you can play that as a little retail person, but you're not that I would actually recommend the strategy, but I've joked that you're better off if that's honestly, if you're looking for that torque, buy a quality play and do it on margin.
Yeah.
Right? There's the same torque, but it's a far better play. So there's a lot of retail in this space that obsesses over marginal metal endowment, and there's a lot of companies that actually market themselves strictly based on their metal endowment, with seemingly little to no intention of ever going to production. Like it's a pure optionality play, not Not what I'm interested in, not how we do business, but seems to be interesting to some people.
So being up there, what is it like just being up there and the accessibility of the project? Could you speak to that?
Yeah, look, we are extremely fortunate that we have a road to the project. Yukon, this is a territory the size of, I don't know, might be as big as Washington and Oregon combined, perhaps, or something like that. Someone's going to call me out because I may be way off. I'm not just like trying to imagine, but it's big, right?
Yeah,
and it's got a population of 40,000. So to describe it as infrastructure deficient would be a understatement. This is just the nature of the beast, right? That's part of the opportunity, is that you're going out to these places that not a lot of people have had an opportunity to go out to.
Right.
So when Hud Bay found the one first deposit discovered there in 1951, that was because of the road that had been put in during the Second World War. And that was actually a road built by the U.S. Army to support a oil pipeline from the Northwest Territories to the city of Whitehorse to produce fuel for the Alaska Highway construction and potential invasion of U.S. mainland in Alaska, right? So that opened up that new area, and prospectors got up there and found some things. So having that access is a bit of a double-edged sword, because obviously it helps a lot with development, but it also means that it's been looked at quite a bit, right? Because it's not like a huge barrier to entry to go out there. You don't need to spend $10,000 on helicopter just to go take a look, right?
Right.
So it's great. I think if you ever get a chance to go to Yukon, absolutely do. Drive some of these crazy roads and check out the scenery and wildlife and everything.
Cool. So is there anything else you wanted to add?
No, I think that's good. I think we touched on quite a bit.
Yeah, we did. And so where can people go to learn more about your company and learn more from you?
Yeah, so the company Fireweed Zinc, so fireweedzinc.com, at Fireweed Zinc on Twitter, all the other social pages. I post quite a bit on Twitter, and I try to be useful there. Mostly I just, make easy jokes. But you can find me at Yukon Brandon. It's a good place to find me and catch up with what I'm up to.
This discussion is for informational purposes only. Nothing in this discussion should be taken as investment advice. Guests are not compensated for their appearance. Do not base any investment decisions on the information presented. This video contains an affiliate link. While it will take you directly to Steve's brilliant free newsletter, if you do decide to make a purchase on the website, I will receive a small commission. In full transparency, I wanted to disclose that to you.